everyone, and thanks for joining us. My name's Denny Smith. Today is Tuesday, October 1st, 2024, and on behalf of many of the stockholders of TRX, BillHolter and I have made arrangements to have a Q&A call here with StephenMullowney, the Chief Executive Officer of TRX Gold Corporation. Steve has graciously set aside some time for us, and we're going to make the most of it. Whatever time we have with Steve is precious, and we're going to take advantage of that. Now, many of you know BillHolter, one of the premier gold and silver brokers in the world today. He's also joining me on the call today with Steve, and I've been looking forward to hearing the updates from Steve about TRX, and of course also from Bill about the gold markets. And we all want to hear from both of them about the recent news that will affect our investment in TRX Gold Corporation. Before we get to Steve and Bill in this discussion, please be aware that in our conversation today regarding TRX Gold Corporation, we are not giving anybody investment advice. That's not what we're doing. What we're trying to do is provide a platform for a frank discussion about the company, the opportunities and threats in the current economic and mining environments. But it is important to remember that your investment decisions are your own, and those investment decisions need to be based on your own personal financial situation and the advice of your accounting and financial advisors. So let's get started. Steve, first of all, thanks for sharing some time with Bill and me today.
Yeah, there's no problem, Denny, to be sharing some time. I always got time for shareholders, and I'm not sure my time is that gracious, but thank you anyway for saying that.
Now, wait a minute. We didn't beat up on you. We just said we needed to talk.
Yeah, I know.
All right. And Bill, I know you're busier than a pair of jumper cables at a Kentucky funeral, so I'm glad you could be with us too, because every time I turn around, you're doing another interview.
My pleasure, Denny.
All right, Steve, would you bring us up to date on TRX's strategy for scaling up the gold production and the processing capabilities there at Buckreef?
Yeah, so as we mentioned in our press releases, the 2,000 ton per day plant came online in June of this year. That now has been ramped up to that nameplate capacity, all the components, and there were a few other components after June that needed to come in place to get it up to that processing capacity. But we're at that processing capacity now of 2,000 tons per day. The crushing circuit is working well. Kinks have been worked out of that. And the grinding circuit is also working very well and performing as we expected it. And so kudos to the team, another expansion done on time and on budget, and we're really excited for that expansion. And certainly, I think, the focus in this year, well, I shouldn't say I know the focus will be now creating a lot of efficiencies from that rapid growth. So, our recovery rates can get higher and things of that nature, and we know what to do to get them there. But certainly the focus is going to be a little bit more on operational improvements in 2025.
You all can be very proud of the fact that you did that on cash flow, Steve. That's pretty hard to do. There was no dilution. That's pretty skinny work sometimes, but you pulled it off, and you can be awful proud of yourself for that. Steve, would you elaborate on TRX's relationship with the Tanzanian government, and how is the partnership benefiting company operations and future prospects?
Look, I've often said that Tanzania is a good jurisdiction to get things done in. And so the government has a focus on increasing their mining investment. We have, Perseus just took over OreCorp, and an M&A transaction will invest a lot of money there. You have Kabanga Nickel being developed by Lifezone with BHP as a partner. And of course, Geita is owned by Anglo, which produces 400,000 ounces, and Barrick's Bulyanhulu and North American complexes are there. So our relationship with the government has been very good. They want to see a larger, more successful mine in the region. We have 700 employees and contractors on site today and growing. So that's really, really valuable to the local community. We're consistently increasing royalties and taxes, obviously, given the growth profile of the business, and also, gold price lends a good hand to that as well. And they're supportive of that growth, and they want to see that investment. And so we utilize a lot of local Tanzanians. We're 100% Tanzanian on site, and we build everything with Tanzania. So the relationship is strong. We have a good CSR, ESG program in place as well. And they don't hold us back. That's really the way I would like to characterize it is, if you need a permit for tailings expansion, you get a permit for tailings expansion. You do the work, you do it up to world standards, but it's not something that gets dragged out. There are reasonable people to deal with to move things forward.
Steve, I'll ask one more question, then I'm going to let Bill jump in here. What initiatives is TRX undertaking to stay in touch with your current shareholders, as well as attracting those new retail and hopefully institutional type relationships? How's that going?
We're constantly on the road, at conferences, talking to people such as yourself. Christina's really busy on responding to shareholder concerns. And we're consistently reaching out to and broadening our marketing relationships to attract new shareholders and new relationships. There has been a focus in the last 4 or 5 months more on reaching out to that institutional shareholder base. They've been slow in the current equity markets to come into small caps, but you still have to go out to them because eventually that capital that comes in is going to reach down to small caps, and you want to be one of those investable names. Certainly, what I can say over the last 3 or 4 months, the interest from institutional shareholders and potential institutional shareholders is getting stronger and stronger, particularly as we continue to execute. One of the things that you mentioned is the ability to execute without dilution, and that is attractive to that institutional shareholder base. Now, given we are a small cap, the liquidity, I would like to see it more. Because that enables that shareholder churn a little bit and to bring them in to purchase in the market versus, we'd all as shareholders would like to see them come in and just purchase in the market and pump up the share price, but they want to earn returns too. So there's that delicate balance.
All right, Bill, I've kept you on minimum wage, but you still have to earn a living here. It's your turn.
Yeah, Stephen, can you talk a little bit more about the potential for institutional investors coming in? I mean, we've got $2,600, almost $2,700 gold. And it's been my thought all along that in the past, up until I guess the 2000, well, even up to the 2016 run in gold, you see these big moves in the mining companies, and you see institutions, starting to lick their chops. Talk a little bit more about the institutional potential entry across the board in the mining industry.
Yeah, so I truly believe it's going to start to morph into a name by name basis more than anything else. There have been, let's be honest, over the last 2 or 3 years, there's still been some real messes in the gold mining industry. And that certainly is weighing on the institutional interest. And so when you get forward and talk to brokerages, you talk to the actual institutional investors themselves, they will reference that. So one of the key attributes that you need to put forward is you're able to execute, you've taken care of your risk, and that you know how you're going to grow. And I think we are positioned extremely well vis-a-vis other miners to come across. Although we've done things on a smaller scale to get to where we are, and we're growing that scale, we've done it successfully and we de-risked significantly, which takes a lot of risk off the table towards those mess ups that I referred to earlier. That positions us much better when that institutional interest comes in. We're talking to more and more institutional investors. And that is what I'm picking up. We're also going to reach out by a lot of brokers around institutional interest in TRX. The key is how now, as I mentioned, is we are de-risked, we are cash flowing, and we need to start to grow and see that value end up into our market cap. So it's a delicate balance, but I think we're getting there, and certainly in the 3 years I've been here, the interest is a lot more than it has been. I think it's going to be, though, on a name-by-name basis, because despite what the gold price is, if you have risk, it doesn't matter what the gold price is.
Steve, how are you differentiating things? I really appreciate that explanation you just gave about how you're approaching your communication.
Yeah.
Is the differentiation with other junior mining companies, is it possible when you're looking for investor capital? Can it be done, or are they just lumping us all into the same bucket?
There's a part that's lumping them into the same bucket, and there's a part that's saying, okay, these things there's value down here now. So we need to go and look at it. But we need to look at it on an account by an account basis or company by company basis. So the differentiators are what I just described: a de-risked operation, understanding what the risks are. There's always going to be risk in mining, but you have to understand how to manage those risks and to take that risk and to continue to grow. Sometimes taking risk and turning them into positives. Certainly the fact that we're cash flowing and can continue to grow at a cash flow is a major differentiator. And I've said this to a lot of people with the way the markets are currently structured. There are a lot more trading activities and a lot more firms that make money off of trading than there ever have been. And if you're a constant issuer of capital, then people are going to make money off that trade. And it's difficult to get out of it without creating growth. So if you're just going to be a strict explorer call, you have to create a reason for someone to buy your stock.
You said you've been here coming up on 3 years. I hope you look back on them and don't think of them as the longest 3 years of your life. But I'm sure they have. You have really you've really organized things pretty well. All right, Billy, you got another one?
Yeah. Looking out over the next year, can you kind of update us on what you're forecasting as far as production ounce-wise, and have our costs per ounce gone higher, or are we keeping that under control?
Yeah, so on that, for 2025, we're going through that process right now. What I can say is I won't put a definitive number, but it will be more than last year, certainly. That is the case. With regards to cost, there's a couple factors in there. I look at costs on two bases. One is on a per ounce, obviously, because that's what the market really looks at. And that a large determinant on that is the grade profile. And in a single mine asset, your grade profile will change over time. So we're going through a little bit more lower grade right now. And you've seen that in our last quarterly results than we historically have had. But now eventually we'll get back to better grade profile, right? So you can't move the dirt around. You got to get to it, right? So you just can't go and say, I want to get to that one right away. You got to move the lower grade stuff before you get to that. So I look at that, and I look at the cost on a per ton basis, and as well, because that's what you're actually processing. You're taking it out when you cost it, and you put in place your budget. You're doing it on per ton out of the ground, per ton through the mill. The grade profile is based on recovery rate. So, what I would say is on a per ton basis, we're doing great. On a per ounce basis, it may be up a little bit and then come down again over time as we get into the better grade profile. It's just the nature of a mining business. So I don't see a lot of cost pressures, put it that way.
Steve,
yeah, let me add on just one quick question. And first, I'd like to say, you've said that the project is de-risked, and I certainly feel that. With the cash flow, I know you're not going to have to, issue equity, every 6 months or a year or whatever.
Yeah.
So it's comforting to know that the project is de-risked. We do now have cash flow, and you and I have talked, a bunch of times. I'm a property guy. Can you talk about what the plans are or what your outlook is for drilling?
Yeah. So let me first say, I think what you're asking really is growth. We do have opportunities to grow the mill again and to get those efficiencies. Certainly that's going to be looked at, and I've certainly spoken to the team about that. I don't think we'll, pressure them as hard to do it, but certainly it's going to, the expansions will not stop on that angle. And then on the second part, look, there's a lot of gold on this property, and I've always said that, but you got to get the cash flow to put the drill bit in. So when I'm looking at, there's a drill rig now turning, there's assays coming in, there will be eventually drill results that will be catalysts for this property. I'm pretty confident in that will be the case. The matter is, it's just how quickly it's going to be done. The better the operations are, the quicker it will be. And we'll get that drill bit really going. But certainly, I would say that the zones may crisscross. We certainly need to get back into Anfield. The northeast is always looking good in the south of the main zone as well. So, and there's probably some satellite pits around here too on this property. So just on the 16 square kilometers, I'm pretty confident that we'll have multiple years of drilling to be able to go after there. And look, the drill hole database only has around 150,000 meters. So, and we have a net per ounce profile that we have on that is good. So I'm confident. It just, unfortunately, it just takes a little bit of time.
Steve, I know you're a Canadian, and in Canada, it's all about hockey, but I grew up in Indiana, and it's all about basketball. And I get the feeling that TRX is the 5'6" point guard that is trying to get in the NBA. So here's the question I have for you. How do you attract the attention of leaders in the gold mining industry to build some recognition and support for the company in terms of promotion of TRX, I guess is where I'm going. You're 5'6", and you're getting into a market of 7-footers.
Yeah, I guess we got to be like a good Indiana boy, Fred VanVleet, who used to play with the Raptors.
How did you remember that? Oh my God!
Right. So
yeah,
he got a good contract. He's got a good contract with the Houston Rockets now.
Yeah.
Again, it's performance, de-risking, getting that reputation as a good steward of capital, which we have been, as a good steward of knowing what you're doing, a good steward of risk management, and continual growth. Eventually, you grow your way out of this, and someone's going to stand up and notice you. Just like Fred VanVleet. He sunk a lot of three-pointers, and people noticed them and gave him a big contract.
You've surprised me a lot in 3 years, but the fact that you knew who he was, that's a killer. Bill, you got one?
Yeah, as long as you're on the topic of five-footers versus 7-footers, how does TRX stack up against our peers?
Oh, great question.
Yeah, so I think I look at it in a couple ways. I think the per ounce metric is one that's gone to the wayside a little bit. I think we're stacking up okay against our peers. Our stock performance has oscillated. I would say there's less volatility in our stock price on the upside and the downside versus our peers.
Right.
Sometimes that's good. Sometimes that's bad. Right now I get a lot of calls from shareholders because I think it's on the bad side. But when it's on the good side, I don't tend to get a lot of calls. So we are more in an oscillating range. So I think we're sometimes, if you would have talked to me 9 months ago, we would have been on the good side of that. Right now, I think we're on the wrong side of that. So I would like to see better performance there. With regards to cash flow profile and positioning, I think we're better positioned than most of our peers, quite frankly. We're growing a different way than most people have done in the traditional mining model. It is a different investment thesis. Sometimes it takes a little bit longer. Sometimes it's quicker in this growth model, depending. But certainly I'm supportive of this growth model while we could still take that cash out of the ground and put it back into the asset and grow it.
Steve, share with us some of the big wins for TRX this last year. And I'm also interested in what your current longer-term concerns might be for TRX. So I'll let you brag a little bit about the goods part, but then tell me what's your worry factor? What are you worrying about? Yeah, so
the wins, obviously, building and expanding the plant again on time, on budget, out of cash flow. And so that's a big win. Longer term, also I'm going to put a win that was released this morning. The Met results come back in line to what we thought it would be, which is its grind size at Buckreef. So we have we understand how to process those sulfides. We're currently at 80% at 75 microns, passing 80%. If we go down to 25 microns, it goes up a lot higher, as well as the retention time. So we have an understanding of that. We understand the process flow sheet that's required for that. That has a potential to add significant value to the project, and is very similar to, and talking to Gaston, our general manager, to the plant that he ran in Buzwagi. So it, which was a Barrick asset and about 30 kilometers away. So that is that's an extreme positive. Upcoming, I'm hopeful on good exploration results. Possibly, another plant expansion, and then adding what I'll call mineable ounces over the short, medium, and long term, and giving the market a better sense of this project, as well as renegotiation of the joint venture agreement. I've said that several times, that we're in discussions with the Tanzanians around that. Obviously, there's politics involved in that a little bit, so it takes a little bit more time. That's normal, so that doesn't concern me. And, I think where we need to is the goal is still the same, is to have a large project that produces a lot of gold here over the long term. That really hasn't changed. It just requires the capital to get it there, which is currently coming out of the ground.
Stephen, I've got an add-on question, I guess, to that. We know that the price of gold going higher is obviously a positive for any mining company. And currently, energy prices have softened. I mean, diesel prices are down across the board. But just a week or two back, the Federal Reserve started cutting rates. What effect, if any, will the world trying to lower rates have on a mining operation?
Yeah, so look, lowering rates impacts us a couple of ways, right? A couple of factors, I think. When you looked at gold prices over the longer term, and you guys do this, and I certainly do that, one factor that does influence gold is interest rates, so 5-year treasury rate, 10-year treasury rate. And it has an inverse relationship, the price of gold, to those rates. And I think that's held up fairly well. And so I don't expect that to decouple anytime soon, completely anyway. So lower rates should mean higher gold price, and that should get priced in over time. The current cuts are probably already priced in. We saw that. But if there's more cuts, then certainly I would anticipate, based on that relationship, higher gold prices. Also, look, you both discussed extensively on this. The world is a little bit of a more of a wild jungle than it used to be, I guess, is a nice way of putting it.
What a gentleman. I could think of better ways to say it than that. Oh my goodness.
How about saying powder keg?
Yeah.
Yes. Well, you have one way of saying it, I have another way of saying it, but we're saying the same thing. It is a very volatile geopolitical environment. We certainly see the tensions between the various countries that are attempting to influence various regions, and including in Africa. We can discuss more openly West Africa and what we see going on there with the juntas and Russian influences. Certainly the Middle East is a little bit of a mess, Ukraine, Russia, and then you have American politics. And so, a lot of uncertainties as a result of all that. It will eventually get resolved, but the uncertainty around that should hopefully be good for gold price as well. And I do get the sense that it is being used as a currency out there to buy goods and services, right?
Absolutely.
So that is also creating demand for gold, physical itself. And you've been a large proponent, Bill, of eventually the physical demand has to get reflected in the price.
Yeah, and Bill scares the snot out of me, to the point where I won't have solid stools for a month sometimes after I listen to him. So with that being said, Steve, what are your thoughts about the gold mining industry and the market's desire for gold mining companies? This is different. We see them somewhat interested in gold, but it used to be that the gold mining industry would be lumped into that. Is that still the case?
Look, I think what has happened, and I've discussed this extensively too, is the market. Yeah, it's great that you have gold in the ground, but you also need to have cash flow and a reason to buy the stock. And cash is still, being able to convert gold into cash is still relevant from a valuation perspective. And so I think we've seen, gyrations in how gold investors invest. There used to be a time when it was resources in the ground. We all remember those days up until 2012. Then that reversed. And I've been a proponent of saying the market has changed too. There's a lot more financial players around as well, driving these valuations, which kind of sometimes scares people off in the way they did trade around what I'll call constant issuers. And then there's people evaluating gold companies based on businesses too. Is it a good business? So when gold price goes up, what has traditionally happened in this industry is the cost per ounce goes up because you lower the cutoff grade and you mine more. And that has had an impact. Now, if gold miners can hold the margins and increase the margins in this environment, then, which is not easy because there's a whole bunch of inputs in there, then I think you'll see a positive reaction. I think a lot of investors are still have a little bit of a bad taste from the last go around, and they're just waiting to see what's going to happen. Are the big gold miners going to be patient, prudent in M&A, not blow their brains out? Will they be prudent with debt as they expand? All of those sort of factors, and they have been, but I think they still want to see a little bit more of a tailwind of that type of behavior. That's just my own personal opinion.
From Bill, before we get to the last question, Steve, I got to compliment you. For the people who are hearing this video, that is exactly the same thing you told me 3 years ago when you first came here. That, look, we've got to build a business. We've got to build a mine. We can't just sit here with a property and wait for people to come to us. So congratulations. I mean, you do deserve a pat on the back because you've said that for 37 months now.
No, and I'm not going to go away from that. You have to give a person a reason to want to invest in you. So sometimes for a junior, it's a drill hole result. But what does a drill hole result really say? A really good drill hole result. It says that the property has a much higher probability of being economic in the future than it did prior to knowing that a drill hole result was there. That's really what it's saying.
All right, Bill, you get last swing at the bat here.
Steve, as I mentioned, I mean, I feel much more comfortable knowing that we're solid, we have cash flow, but that brings up a fear, and that fear is, we've hung on to this point, and we're not a buyout target. Now we've got cash flow, we've got a plant that's producing X amount of ounces of gold. And even without a hot, or hot drill hole results, my worry is somebody's going to come in, with a low ball bid and try to take this thing away.
So ultimately, look, if you execute and you can't get rewarded for it, you may end up in that situation. I look at the positive that you execute and you have interest. But ultimately, as I said before, that's a decision of people like yourselves. And myself as shareholders. You get to vote on that. If you think it's too low, you just say no.
Well, Bill, I've got a couple of questions for you, boss. Yeah, we've seen a big pop in both the price and volume in gold and silver. Give us BillHolter's perspective of really what is going on here. And I'm probably going to give you a follow-up question, but what's going on right now, Bill?
I can tell you from being a retail broker, the demand from May, June, July, and August definitely slowed down. There's no question about it. And that occurred at the same time that prices were rising pretty strongly. And the rising prices, in my opinion, is primarily, it's big money worldwide, if you want to call them hedge funds or family offices. But you've also got central banks across the world as net buyers in a pretty big way. Actually, I guess in the press release, in a press release a couple days ago, Tanzania said that they're going to increase what they're buying tenfold, 12-fold, or something like that. So they're going to a little country like Tanzania is going to be buying gold for their treasury reserves. And I think it's all a function of the world clearly sees that the United States is falling away, and they can clearly see the BRICS being formed right before their very eyes. Now, there is a meeting end of October. Do they bring forth a currency then, or do they just bring forth a communique and kick that can down the road? I don't know, but it's pretty clear that the world is moving away from the dollar, moving towards a BRICS currency, and they've not made any type of announcement what the backing will be, but the understanding is it's going to be 20 to 40% gold. So I think you've got front running, if you will, by central banks to fill up their treasuries with a component that's going to be part of the BRICS currency, which is gold.
All right, so you have the central banks, the sovereign wealth funds. What about institutional investors, Billy? Are they coming on?
Yeah, obviously. I mean, across the board, the only sector that really slowed down was retail, and it really surprised me because generally retail gets hyped up once they see higher prices. I mean, that's typical for retail. You buy high, you sell low. Maybe $2,600, $2,700 gold is not high. Maybe this is just the start. But the retail market was very slow until, I'm going to say, very late August, 1st of September. So the retail market pretty much turned on a dime, and my phone and my email started to blow up about 4 weeks ago.
For the record, this is the first time you've met Bill Holter, his phone is a flip phone, but it still works, and if you need him, you can track him down. Bill, thanks for carving out the time for us today. And Steve, thank you too. I know you guys are both busy, but thanks for making this happen.
Yeah, thanks, Denny, and thanks, Bill. It's always a pleasure to talk to both of you. And I always enjoy getting into these market factors and geopolitical factors and things like that. The world's always a fascinating place. And it takes my mindset off of just ounces and ton per ton cost. So
yeah, and hockey season's only 2 months away, brother. We'll be there.
But no, it's less than that. Another couple weeks and we're done. And we'll be going again.
To all of you fans of TRX, that's it for us today. And my thanks to Steve and Bill for being a part of all this. If you do have additional questions, and you might, please feel free to reach out to Christina Lally at c.lally, Lally, at trxgold.com. We look forward to visiting with you again in the future, and thanks for your interest in TRX Gold.